Ruthie from FS Securities, education and information firm on the Gold Coast in Queensland, Australia. And every Monday morning I go through what happened globally around the world and try to forecast what we may see this coming weeks. I'll show you how investors and traders can make money on our stock market and on the global markets. I'll show you what is hot and what is not, and what you should hold and what you should fold. And by the way, if you have any feedback you would like to give us, we would really appreciate hearing from you. Well, from around the globe, we start with the Dow Jones Industrial Average Index, which makes up the top 30 US stocks. On Saturday morning, as you can see here, it was down 622 points. That is down 2.56%. And the day before, it dropped by another 288 points, or 1.2% down. Well, on Saturday, the S&P 500, the broader S&P index, was down 2.8%. The Nasdaq, the technology index, was down 3.2%. In Europe, the Stoxx 50 index, which comprises most major European markets, was almost flat. Actually, it was closed for the Labour Day. In London, the FTSE 100 index was down 2.3%, and the DAX in Germany was down 2.2%. In Japan, the Nikkei index was down 2.8%, and you can see what happened the day before. And in China, the Shanghai index was closed for the Labour Day. As you can see, there is no change. On our market on Friday, we were down 5%, 276 points. The futures, by the way, was showing that the market is likely to open down by 7 points on Monday morning. Gold was up $6.40 and closed at 1,700 US per ounce, up 0.4%. Silver was down 4 cents, dropped 25 cents the day before. And Brent, that is the oil in Europe, was down 4 cents to $26.44. Remember, the day before it was up by $2.73 US per barrel. And the West Texas crude oil was up nearly $1 on Saturday morning to $19.78. If you know what's happening between China and the US, supposedly they're buying soybeans from America. Well, the day before was up 2.1%. However, on Saturday morning, it was actually down $5 US per bushel. The US dollar, if you look at the Australian dollar versus the US, was trading at $64.2 cents. Will also give you 58.5 euro cents and 51.3 British pound. Let's have a look at the chart for the Dow. That's the weekly here. You can see the highest point was very close to 2,980, and the last few weeks dropped all the way down to just above 18,000. And in the last few weeks, 1, 2, 3, 4, 7 weeks, it managed to recover 50% of the drop. The 50%, this is actually the Gann retracement. The market, all the technician or the technical analysts, they pay a lot of attention to the 50% retracement. Is it going to try to go above to the 61.8 Fibonacci retracement? Again, a technical indicator. It's interesting. However, we believe that it is more likely it will go down to 38.2% Fibonacci retracement rather than going to the 61.8. If you look at the daily chart, there are 3 important lines here. The black is the 200-day moving average, the pink is the 100-day moving average, and the orange is the 50-day moving average. To go bullish on the long term, we like to see the 50 above the 100 and the 100 above the 200. Well, what do we see here? On the long term, on the daily chart, we see we have a bearish long-term trend. And until the orange line starts to converge into the pink and actually crosses it above it, and hopefully will get above the 200, well, we are still in a bearish market. Now, for the very short time, we look at the stochastic, and the stochastic indicator for the very short term is bearish. However, the parabolic stop and reverse, which is those dots, the red dots, happen to be below the candle, and that is bullish. And also the fine orange line, the very fine orange line that I'm actually running over, and the black dotted line, the orange is the non-day moving average, the black is the 21, and because the orange is above the 21, that is actually a bullish indicator. However, if you look at the indicators on the weekly, we have more bearish. However, on the daily, for the short term, we have a bit of a neutral indication, some bullish, some bearish. So again, what we do, we take notice of those indicators, and we have a mechanical system that is designed to actually put all the indicators together for various time frames, and we can actually give you a forecast with a 60 to 70% probability of correctness, whether we are bullish, bearish, or neutral. Now, before we go on to those signals that I'm going to talk about, what we have here in the middle here, those two columns indicate the change of last week. But the next two columns, we show you the 2-week changes, and we like to consider the 1 week change with the combined 2-week change to be able to predict what is the trend of the market. For instance, the Dow last week was down 1.9%. However, when you put the 2 weeks together, it was almost flat with 0.2% rise. And the same thing with the Nasdaq. It was down 0.2% last week from Monday to Friday. You put the 2 weeks together and we have a very strong Nasdaq, nearly up 6%. Why we like to consider the 2 weeks with 1 week? Because that could be aberration for 1 week, and we like to look at the aberration of 1 week and compare it with the 2 week trend. Again, the US dollar is apparently very strong, but interestingly enough, the Australian dollar versus the US happens to be also strong. We've gone up to 63.95 last week, or Saturday morning, and Saturday before was actually 63.6. Remember, the Australian dollar was below 59 cents US about a few weeks ago, more than 2 weeks ago. Now, in terms of commodities, gold was up $51.20 US per ounce. However, when we compare the 2 weeks together, we're only up $5, not 51. So obviously the week before, 3 weeks ago, obviously we had a major drop. And again, do we get excited by the 51.2? We may. However, why? The week before, we were actually down. Obviously, we were down $46. Silver, by the way, was down 3.5% over 2 weeks. And crude oil, that's the West Texas crude oil, was down 26% over 2 weeks. Again, if you're interested to trade any of those other commodities, such as soybeans, wheat, corn, coffee, cocoa, sugar, cotton, live cattle, all you have to do is talk to us and we'll give you some forecast from the mechanical system. Now, back to our mechanical system that we have designed over the last 25 years. What we see here, this is actually last Saturday. at the end of last week, the Dow was neutral for the investor. The investor is the long-term trader or investor. Then we've got the conservative trader, aggressive trader, and very aggressive trader. And we designed a trend or a forecast with 60 to 70% probability of success, depending on the time frame of the charts. And we need to have two charts agreeing with each other. So for instance, for the investor, we look for 5 out of 8 indicators to tell us whether we are bullish, bearish, or neutral. And then we go to the weekly, and now that we've got a signal from the monthly chart and provided 5 out of 8 indicators on the weekly, if they confirm the same signal from the monthly, we trade. If the monthly is saying bull, and that is bullish, and the weekly says bearish, then obviously we are neutral. And if you have a position, then obviously you reduce that position, or if you don't have a position, you wait until we get a clearer signal. So again, for the very aggressive trader, and that is actually the daily charts, and we look at the daily charts, and according to that we were bullish. However, I'm pretty sure that by the time Monday and Tuesday, that by the way doesn't change. That's weekly. There is one signal that comes out at the end of the week and stays. That signal remains for the whole week. The daily on this side, of course, can change every day. As you can see here, the Nasdaq was bullish for the very aggressive and the very aggressive. That's Wednesday, Thursday, Friday, Saturday, and of course in the beginning of the week you will see Monday and Tuesday. So what happens here? We actually have a signal from the weekly and a signal from the daily, and provided we have confirmation in both, then we go bullish. So in actual fact, we have a bullish signal for the Nasdaq, for the weekly and the daily. Now, by the way, this is actually the same for Saturday. But if you look here, we need to actually now consider what happens on Monday and Tuesday. Maybe we want to wait Monday and Tuesday and then maybe start to trade Wednesday afternoon, Wednesday. So we have a signal from the weekly and we need confirmation on the daily as well. That mechanical system was designed based on we are people with different risk appetite. We don't give one signal to everyone because your risk appetite can change depending on whether you are an investor or a very aggressive trader. Again, if you want a copy of this slide, all you have to do is talk to us. Now, looking at the weekly and the daily for the ASX 200 index. Out of several weeks, even though we had a bad week last week on Friday, we ended up having a green candle for the week. So again, it's important to actually consider all these charts and all the technical indicators and design a system for it. The S&P 500 at the closing bell, we are actually down 0.06%, less than 1%, 3 points up, and it closed at 5,245. Over the full 2 weeks, we were down 2.6%. So we don't get too excited by that. Now, our market, to a greater extent, is made up by two major sectors, the financial and the materials. When both of these sectors are up considerably or down considerably, the market is usually dragged by them. Not always, but most of the time. So what happened here? The financial last week was up 0.4%. The materials was down 2.3%. But over the last 2 weeks, the financials were down 3.7% and the materials were down 2.7%. and the ASX 200, which by the way takes into consideration the top 200 stocks, was actually down 2.6%. Now, if you look at across all sectors, the best sectors last week from our technical analysis was information technology, was up 6.6%. Information technology, where are you? Here we are, 6.6%. And by the way, over the last 2 weeks, 8.5%. So the information technology, 2 weeks in a row, very strong signals. Energy was down, was up 5.4%. However, it was down 0.9% in 2 weeks. Consumer discretionary was up 5%. And by the way, the worst sector was gold, down 10%. However, if you look at the last 2 weeks, so obviously we had a very good week before, because obviously if you look at the week before, it was up over 10%, and despite the drop of 10% or slightly below 10% last week, we were still up 1.6%. So one very strong week, one very weak week. It tells us this is actually a very dangerous market to trade. Very high up 1 week, very down 1 week. Need to be cautious. And again, all those sectors are important to analyze. Now, if you look at the stocks, the top stocks, the best performing stock over the full week for some of the major companies, Worley was up 20%. 20% Worley. And obviously it was down 5% the week before, 20%. It gives you 15% rise over 2 weeks. CIMIC, the old Leighton Holdings, was up 8% and Santos was up 5%. Worst performing stock was Newcrest Mines, which was down 12%. However, if you look at the last 2 weeks, it was only down 2%. Again, because of the gold being up and down, obviously Newcrest Mines is up and down. We like to look at volume. Here we see the volume. It's actually been coming down over the last 15 days. But look, this is interesting because on Thursday, our market had more advances than decline and the volume was high. On Friday, we were down nearly 5%. However, the volume was down in comparison to the previous day. So again, tells you that the market is not very strongly bearish because of one day. Remember, we had 2, 4, 6 days of advances, really good market trend. And if you look at the whole week, advances were above the declines. However, if you consider, look at this, over the last 50 days, the advances were only 45% over the total, and the decline were 55%. So really we had a major drop in the market, a small recovery, but we're still in a bearish market. Be aware of that. From our mechanical system, now what we like to do is actually, this is last Saturday. However, the Saturdays before, and this is the trade last week, Thursday, Friday, and then Saturday. And look, we tried to actually tell you, according to our indicators, we were bearish on the weekly for most sectors with the exception of gold. Well, again, the daily, that's on Thursday, we're still very strongly bearish on the All Ordinary and the ASX 200 again bearish, and we change small direction for the conservative trader on Friday morning. At the end of Friday, Saturday morning, we were bearish for most investors and traders except the conservative trader. But we remain bullish on gold. Even though gold, as I mentioned, fell quite a bit last week, but when you compare the 2 weeks together, we were only slightly bearish. The indicators, and by the way, you need to remember that some of the indicators are lagging. They take time to form. So we need to actually wait to see what happens on Monday and Tuesday and see if those daily indicators change. By the way, on Friday, the most active companies, ResMed, trading at $24.35, was up 4%. Most of the high traders were already all bearish on Friday. So again, you need to be very, very careful about that. The worst amongst this list: Aristocrat down 5%, ANZ Bank down 5%, Rio Tinto down 5%, Lend-Lease 5%, as you can see the changes, and they were the most active in terms of volume. An important part of our research, we look at volume across all stocks. We start with the top 50, and on the weekly we could not see any stock on the up or down that the volume over the full week was above the 50-week average volume. But when you look at the mid cap, the company below $1 billion market capitalization, we've got West African Resources, had an increase of 14% in the price and had nearly 300% the volume. And explaining, over 50-week, the average volume has been 12 million transactions per week. And last week we've seen nearly 47 million shares transacted. The question is why? Same thing with Kogan, 13% up in the price, and the volume was up 58% above the 100% average. Paladin again was up. On the downside, we've got a few companies here. The one that really strikes me is Macmillan Shakespeare, was down nearly 6%, and the volume was up 48%. So it's very important to look at the volume and the price changes, and because if the price goes up and the volume goes up, that's good, that's bullish. If the price goes down and the volume goes up above the average, then we need to know why. On the daily side, this is the daily now, and nothing on the bullish side for the top 50. However, on the bearish side, IAG, the old NRMA, the price dropped by 3% and the volume was slightly above the average. Nothing really to be too excited about that. On the downside, on the upside for the mid cap, a company called Lifestyle Communities, price was almost unchanged, 8% rise. That's nothing really exciting, and nothing exciting on the daily either here. All right, well, and that is all from us, by the way, at FS Securities. As I mentioned, we are an information and education company, and everything we said here is of general advice only. So before you trade, remember, you need to understand the risk, and you talk to us or you talk to your professional advisor. There is no guarantee that anything we said is going to turn into gold. There are, of course, risk, and of course there are losses, and of course there are profits, so you need to be aware of that. If you have any questions, all you have to do is ask. How to reach us? Well, here we are. You can write to me at George at FS Securities. FS stands for full service, fssecurities.com.au. You can call me on my mobile. If you're ringing from overseas, you put 61, that's the country code. You don't need the 0. If you're ringing from overseas, you ring on my mobile 61411259526. Finally, have a good week and happy trading.